Good morning, trading world. It is February 28th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. As we bring February to an end, the spring-loaded trap continues to coil and compress, so don't get caught in it. Coming into the week, I originally said that Monday would develop into a low. It did not play out that way, and it seems that a sharp low is still yet to come. This could happen the way I said, just overnight into pre-market on the 1st instead of Monday. So coming in overnight tonight and pre-market tomorrow instead of Monday. We wake up to lows that disappear quickly as the session opens. That's kind of how I picture things playing out tomorrow. Meanwhile, the spring continues to coil between 403 and 392 with a quick burst that may be due to come down to 389, possibly 387 area. Just a quick note, or just to kind of picture what I'm saying. If you go back 1, 2, 3, 4, 5 days, if you see the last 5 days, we have a clear range that we're in. And the longer that we bounce up and down in this range, is just like that spring building, and then boom. That's probably what's going to happen on the 1st over here. So, gotta be careful. Don't hold any positions, short positions overnight that you can't get out of very quickly and very early. Because like I said, things could start kind of early on the 1st. We could wake up to lows that may disappear even before the open. So that's one of the reasons that I'm using options on futures, so that I can have that flexibility to close positions before market open, and at the same time have a defined risk position instead of just an open futures contract that may go into oblivion. So that's what I'm looking at. That's what is running through my mind right now. Outside of that, retail earnings loom large over the market this week as investors listen intently to future guidance. There are a lot of companies coming out with earnings this week, and the whole point, it's not really the actual numbers or earnings itself, but it's the guidance. Like I say, those are more important than the reports, like the employment reports, CPI, because they have a better feel, they move quicker, they see it better than the government-backed reports that we get throughout the month. Let's get to the key levels to watch for today. All right, here we are with the key levels of the day. Starting on the resistance side, we have our jack resistance at 398 to 399 area, and then we have our queen resistance 400 to the 402 area, and then king resistance 403 to the 406 area. On the support side, we have our jack support at 397 to the 396 area, queen support 395 to the 394 area, and then king support 393 to the 392 area. Things to kind of pay attention to on the day. I said this yesterday. We're playing in a dangerous area that belongs to the higher time frame charts. So keep in mind, you want to pay attention to what's going on the weekly and daily chart time frames, and important and key areas from those charts. When it comes to the weekly, we're looking at a support of around 393, kind of a middle ground of about 396, and then resistance of about 401. On the daily chart, the only difference is the middle ground is around 399, and that resistance is around the 404 area. So that 396, 399 is going to be a key area today and even tomorrow, as a lot of open interest lies in between that area, and it's going to be tough breaking through one side or another, but once we do, we're really going to move. The main thesis for today is bearish, closing below 397.73 with a projected target low of between 396 and 393. The alternate thesis is bullish, closing above the 397.73 with a projected target high of between 397 and 406. The main channel we are in is from 397 up to 416. The main channel below is 397 down to 379. Yesterday, market strength and breadth took a huge gap up and faded from just after the opening. I expect a similar path today. Strength will start strong and fade on the day. We do have dissonance between the technical side, which is bullish just barely, and the quant side, which is bearish. That brings us to the scenarios of the day. All right. Just like yesterday, we have a similar or pretty much the same scenarios. Starting off with the most probable, which is going to be the rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area, find midday chop around either the queen or king resistance before going back down with the same energy or force we went up with the first part of the day. I don't really see us getting too much into the king resistance area today. This 400 is going to wreak havoc trying to get through it, which probably holds where we're going to reject from today. But you always have to stay on alert. We could get that pop above it, but that 400 area is where I see a likely place for the reversal today, if not earlier. All right, our second scenario is our expanded range day structure. We could begin the day fighting to get back to a resistance area before reversing on the day. So you could take this as consolidation, trying to fight to get up into this resistance area close near to this 400 and maybe rejecting a couple times before actually reversing on the day. That is our expanded range day structure. All right, our last scenario, which is a hard one to see today, could be our trend day down. We open gap down and start with a pushback toward the previous close, represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king support area. The reason that this is a hard one to see, because there's going to be a lot of stuff when we get to these higher time frame consolidations. There's a lot of stuff that happens in the overnight hours, and I'm expecting a good bit of the action to take place in the overnight hours. So this may not necessarily play out during the day, but a good bit of this could play out in the overnight session. That's why this is a hard one to peg for today, especially with the higher time frames being in control. As I say all the time, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position, and we manage those risks in accordance to our account size. Today and tomorrow is going to be very dangerous for the simple fact a lot of things will probably happen in the overnight session. I would like to be short to capitalize on that. I will do so through options on futures so that I'm in a defined risk position and so that I could exit those positions prior to the cash open. It's not the best, but it's better than trying to play a futures contract. So we just have to be very careful and get ready, as I think the actual bounce will actually begin in tomorrow's session. So we'll be looking to get long, depending on where we drop to at the end of this session, but definitely tomorrow I will definitely be trying to look for positions to get long in, actually a bunch for a few days. That doesn't mean that we're not going to see some pullbacks. I do expect that to happen along the way, but I see Friday, we're getting close to that, even though I've been saying it for a while now. But we're getting pretty close to that blow off top that should happen. With that being said, I hope this helps. Please be careful. Understand that trading is reactive. What I do is not prediction. I try to line up as many details as possible beforehand, so when I see them happening, I have a visual on how to react. That's pretty much how I look at trading, or how I try to trade. So with that, be safe. Wishing you a positive trading day. Let's go out and make it a great one.